Supercharge your trading returns with these two secret strategies that pro traders use to make money from the market. Hi all, this is the second video in the series of how to make infinite money from the market by pledging your stocks and assets. In fact, in the last video, we had talked about what is pledging, why you should pledge, and how you can start the journey of pledging in the stock market. In this video, we'll be discussing two secret strategies that I've seen many pro traders use across their career to accelerate their investing as well as trading journey. So if you're a trader who already has a portfolio of assets, mutual funds, stocks, everything, like I told in the last video, go pledge those assets and you can start trading with the collateral margin that you receive. If you're a trader who does not have a portfolio yet, but you're interested to start making a portfolio, then pledge it and start making returns, start making profits from the market, then this video is for you. So let's get started, guys. Welcome to another super awesome video in this channel. The name is Ajit. Welcome to Market Feed. So before getting started, guys, I would like to tell you that I am not an investing professional and these are certain tips and tricks that I've seen other pro traders use. Do not take this as an investment or trading recommendation. So the first secret strategy, guys, let's look into it. This is the asset allocation that you should be following. The first allocation, as you can see here, is going to be in gilt funds. These are government bonds. These are mutual funds which invest in government bonds, right? So those are called gilt funds and you can give an allocation of 50% there. We touched upon this in the last video as well. Since gilt funds are cash components while pledging, you can have a 50-50 allocation. It's all okay. Do not worry about that. Right. So the expected CAGR of gilt funds is 8% and the haircut that brokers take will be 10%. That means if you are investing say 1 lakh into this gilt fund, the broker will be giving you 90,000 rupees as collateral margin. So as you can see here, guys, gilt funds, you will be investing 50% of your allocation into that. The benefit of this is gilt fund are known as cash components. So in the market, while pledging, you have to maintain a certain ratio of 50% cash components and 50% non-cash components. We had explained it in detail in the previous video. Do check out the video again. Once again, I'm telling you, if you have not watched this, right? So 50% allocation is to be given in gilt funds. If you're asking me, what are the popular gilt funds out of the top of my head, the good one that is coming into my head is SBI Magnum Gilt Fund. Now, the expected CAGR for such gilt funds in the upcoming years is 8%, right? So 8% and the broker will be taking a haircut of 10%. That means if you are investing an amount of 1 lakh rupees into this gilt fund, you'll be getting a margin, a collateral margin of 90,000. So that means here, if you're putting a capital of 50% there, if you're allocating that, after a 10% haircut, your capital, remaining capital in the gilt fund available will be 45%. Now again, we are expecting 4% CAGR out of this gilt fund because we are putting half of it, right? So if the total CAGR of this asset is expected to be 8%, now that we are putting 50% into it, the expected CAGR on the entirety of our portfolio will be 4%. Now again, the next line item is a simple mutual fund or a Nifty Bs that we have talked about here multiple times in the channel. If you don't know what Nifty Bs is and the benefits, do go check out this video, right? So I've seen people invest 40% of their capital here. In Nifty Bs, you can expect a CAGR of 13% and the brokers usually take a haircut of again 8 to 10% only, right? So again, you can see the capital here and the expected CAGR here. 10%, please do keep as cash. This is because in case of any drawdowns in your strategy, in your trading journey, you'll need to have this cash in hand to settle those losses. So you can see that we'll be utilizing 92% of our actual cash that we started with. After pledging, you'll be getting 92% to trade. And this base portfolio itself will be giving you a CAGR of 9%. In fact, it will give you 9.2% if you're looking at the decimals. So this is a first strategy that I've seen people using. Invest in according to these guidelines and you'll be getting the underlying portfolio will also be growing. In some years, Nifty will grow even beyond this, right? Even above this 13%. And the gilt funds will also give you a smooth, stable increase in your capital. And on top of this, you should be pledging and making returns based on your trading knowledge as well. So this is how I've seen some group of traders accelerate their trading and investing strategy. Now let's get into strategy 2. Here things get a little more complicated, but they get really interesting. So the beginning beginning is straightforward and simple. You're someone who does not have any assets at all. You're wanting to start your trading journey. You want to bring in the cash that you have. You want to buy some assets in a certain percentage. You want to pledge it and then you want to trade, right? But here you have two key differences. So in the supercharger strategy, as I call it, you'll have to see trading as a business. When you're seeing it as a business, you have to see it through two lenses. One, as a mature business where you will not be investing outside capital without any need, right? Imagine, you can think about it. In a mature business, you will not keep adding capital more and more into it, right? And you also, at the same time, you have to see it as an early stage business as well. Why? You should not be looking for profits, or you should not be looking to withdraw those profits in the first initial 2 years. Yes, I know this is a big ask to see it as a business for 2 years, a business which does not make any profit or does not give you any profit at all. But hear me out, even if you are not interested in this 2-year time frame, I know you can have a lot of takeaways from this strategy. Again, this is a strategy that many pro traders in the market, especially option sellers, are using. If you're a really crazy high ROA trader, if you're making 300-400% returns per year, you do not need to do this, right? This is for someone who is making, say, 30 to 50 or 30 to 60% of their capital as returns from trading every single year. So let's get back into the second supercharger strategy by looking at the Excel sheet. So here you'll be investing a slightly higher amount in your gilt funds. You'll be investing close to 60% of your capital there, and you can see the expected CAGR numbers here. So based on our last strategy itself, the only change here is the difference in allocation. So the last strategy was 50-40-10. Here you'll be having 60-30-10. You'll get to know why this change is happening in just a moment. So here you'll be getting a collateral margin for 91.6% of your initial capital. That is, if you put in 1 lakh, you'll be getting 91,600 rupees to trade. And after this, you can also expect a CAGR of 8.7% on this underlying portfolio. And we have not even gotten into the trading returns part of it. Now, there are certain assumptions for this to work. One, you should be a high capital trader, and second, as always, you should be a highly profitable trader. So let's look into the projections for the strategy 2, the supercharger strategy, if you do the second secret step of the strategy. So do not get intimidated by this large Excel sheet. It's very simple. It's mostly projections. I'll quickly explain it. So say you're someone with a capital of 10 lakh rupees, right? And your expected returns per month, let's say, is 3%. So you know that your monthly returns in absolute amount will be 30,000 rupees. Yes. So that means you're putting in 10 lakh rupees, your monthly returns will be 30,000 rupees. And let's say you're someone coming in a tax slab of 30%, then your returns after tax will be 21,000 rupees. Am I correct? Yes, so you have gotten your returns every single month, you have kept away the tax amount, then you kept the rest somewhere else. We'll talk about where, and then you can think about the next step. Correct? So here you have to also find an additional investment which gives you 12 to 13% CAGR. Again, I'll be recommending an asset like Nifty Bees which can easily give you this returns. So in the first month, you have gotten a profit of 30,000 rupees. Out of that, you have a investable cash of 21,000 rupees, right? That much is free cash for you. And as I said earlier, in the strategy, you're looking for at least a 2-year time frame where you do not look to withdraw this capital at all, but you have kept away the tax amount. Now again, you can pledge that 21,000 rupees, right? So you'll be investing 21,000 rupees into an asset which gives you 12 to 13% CAGR, and you'll be pledging that amount, correct? So if you're pledging an investment like a mutual fund, equity mutual fund, or even Nifty Bees, you'll be having a haircut of 8%, correct? So you'll be getting a trading amount of 19,320 from this. Now the fun part begins, because this underlying will also grow. You'll be having profits on this. You'll be having a growth in this underlying Nifty Bees or this mutual fund as well. And you're getting pledged capital, collateral margin for trading as well. So these are certain assumptions are applied here. I know you might not be able to get immediate returns on this small capital of 19,000 rupees. But again, as I said earlier, the higher the capital, the better it is. And do keep in mind that this is a framework that I've seen people using with high capital. So this means that even if you do not have the capital, or even if you do not have the ROI for the strategy, you can still understand the crux of it and then you can execute it later. So here you can see that again, you can make an after tax returns on this pledged amount, right? So this 19,513 rupees here, again you can use it to trade. You can get an expected monthly returns of 3% here. Then again you have to pay 30% tax, you are getting 406 rupees. Now, if you keep doing this, I'm not getting into the next month, anything, right? If you keep doing this for, let's say 12 months, let's see what happens. Let's hide all these rows here. At the 12th month, again, you're investing 21,000 because if you're a pro trader, one more thing that you have to understand, you will not increase your capital for no reason, right? You will try to maintain the same capital. I've seen many people do this. They will not try to compound without any necessity. So you're keeping the investable cash the same. So your total pledged amount increases to 2,52,000 rupees. So I'll be hiding this as well for easy understanding, right? So at the end of 12 months, you'll be having a total pledged amount of 2,47,000 rupees, right? You'll be having that. Those are your wealth building assets that you're building. These are your investments for the long term that you're building. Even if you stop trading tomorrow, right, at the end of 12 months, you'll still have these assets growing at a good enough CAGR. So right now, again, you get a pledged amount of 2,45,000. In this, based on this pledged amount, you're still making an after tax returns on this pledged amount. Correct? You're making 3% per month on this pledged amount and your cash is increasing as well. Your cash in hand. Now let's fast forward to the end of 24 months and see what is happening there. So at the end of 24 months, you have a total pledged amount of 5.26 lakh. This is your after haircut amount that you're getting, right? 5.26 lakh. And your total portfolio will be somewhere around 5.7 lakhs, right? This is after pledged haircut, right? So your after tax returns, you'll still be making returns, trading returns on that. So you'll have a total cash of 1.3 lakhs at the end of 2 years. That means your compounded assets, if you're putting SIP, just imagine as an SIP, you're putting 21,000 rupees for 24 months. You'll be having a portfolio of 5,72,000 rupees and a cash in hand of 1.31 lakh rupees. Now imagine what if you did not do this at all? What will be the real benefit of this, right? So let's quickly look into that as well. If you had made 21,000 rupees into 24 months, you would have gotten a capital of 5,04,000 rupees. This is absolute profit you would have gotten. But right now at the end of 24 months, you would be having assets worth 5.72 lakh and cash in hand worth 1.31 lakh extra. Right now, if you're a super crazy trader, you can once again pledge this cash in hand, get assets, and then keep on doing this. So the supercharger trading strategy is fairly simple. Come into the market with some capital, buy some assets with that capital, pledge that capital, start trading and making money from that capital, and after that, with the profits that you earn, buy more assets, pledge it again, and keep on repeating this cycle. Wow, sounds so awesome, right? I know you'll be having some real life difficulty with implementing this in regards to say drawdowns. What if every month is not in profit, right? You'll be having a drawdown months as well. Then you'll be having months where taxes might become an issue for you, and taxes, we have included taxes actually in the sheet, and your capital might not be as high to go pledge this amount, and you'll be getting enough pledged amount to go and trade one more lot. Sometimes that will also not happen. But again, I hope you got the framework here. And this is one secret strategy that I've seen a lot of pro traders use, but not even one has discussed on YouTube. Now you can do this for a period of 2 to 3 years. The more you do it, the merrier, right? Because this SIP benefits, this compounding benefits on the underlying, it will keep getting better and better as the years go by. And you can come out of this 2-year period with a good chunk of cash as well as good returns from your investments in your trading journey. Now, if you do not know how to start trading but you still want to try this out, MarketFeed is offering an algo trading workshop. The description, you can find the link there. And in this workshop, we'll be teaching you how to automate the strategies, the trading strategies that you are seeing on MarketFeed app. And do go check out our previous video on how to transfer assets from one demat account to another completely online. This is Ajay Ajit signing off. See you. Bye bye.